Hello, this is Dibyush, and I welcome you all to this another session on ACCA Financial Reporting Paper Revision. So today we will be solving one question, or if time permits, two questions on consolidation. Remember, these are revision sessions. So I have been discussing in the previous lecture, I have discussed all the concepts that are there in consolidation. So today let's solve a proper question on it. At the outset only, I want to tell, whenever you are solving questions, please make sure that you guys are following the proper framework. मतलब तुम लोग भी मेरे साथ बना रहे हो, ऐसा नहीं है कि बैठ गए और मूवी की तरह देख रहे हो, वरना समझ नहीं आएगा। ठीक है। On 1st of April 2004, so on 1st of April 2004, Runner Company acquired 80% of Jogger Company's equity share. So this is the parent, this is the subsidiary, and they have acquired percentage ownership 80%. Date of acquisition 1st of April 2004. When the retained earnings of Jogger Company were $19.5 million. So on this date, the retained earnings were $19.5 million. The consideration consisted of cash of 42.5 million paid on 1st of April 2004. What did the consideration consist of? First of all, cash of $42.5 million. 42.5 million that was paid immediately. And a further cash payment of $21 million deferred until 1st of April 2005. Date of acquisition is 1st of April 2004. This payment will be made on 1st of April 2005. Kindly understand, I discussed in the last conceptual class for ACCFR revision for this consolidation that deferred consideration should always be recorded at present value at using fair value of the consideration that you are going to pay. In this case, the cash itself is fair value. So 21 million that you will pay 1 year later. So you will have to record it today at present value. No accounting entries have been made in respect of the deferred cash payment. If you guys remember, I had told you also that generally your board also does the same while setting exam papers for FR. They intentionally, when they are giving balance sheets, see standalone balance sheets of parent and subsidiary. In parent's balance sheet, investments, in this case, see here, they are telling that deferred consideration was not recorded. That is what I was discussing in the previous, when I was telling you concepts, that generally in the standalone balance sheets that is provided for consolidation, you have to very carefully read the question, because generally in parents balance sheet, investments is only recorded at cash paid or cash value. It is not recorded for deferred, contingent or share exchanges. And if the question tells so, we will have to make necessary adjustment. Runner company has a cost of capital of 8%. So this runner company has a cost of capital of how much? 8%. Appropriate discount rate is 0.926. So this is directly given that the discount rate for this company is 0.926. The draft. So in the first paragraph, there is nothing. If you see, date of acquisition 1st of April 2004. This is a company runner and they acquired 80% of Jogger when the retained earnings of Jogger were 19.5 million. Consideration they have written 42.5 million was paid cash immediately, And deferred consideration is there of 21 million. That is not recorded. We will have to record the same. And they have told you the time value of money, 0.926. And remember, deferred consideration, you have to include it in investments and it's a liability. And remember, like present value, it has to be unwounded, means unwinding, same concept as in bonds or leases. Every year it has to increase because you are recording it at present value, no? Draft summarize statements of financial position of the two companies at 31st March 2005. Balance sheet date is as follows. Assets, non-current assets for PP&E. For runner, 455, 800. For jogger, 44,700. Investments for runner, 55,000. As I told you, okay, so figures are given in thousand. तो क्या करो ना? These all figures are there in million, right? Investment 19.5 million, cash 42.5 million, 21 million. Multiply all of them with 1000. You will get your answer in thousands only. For example, if it is 19.5 million, multiply it with 1000, you will get 19,500. That is your retained earnings on the date of acquisition. Cash paid is 42.5 million multiplied with 1000, 42,500. That is your cash for consideration paid. And then you have deferred cash 21 million. That is 21,000. Multiply it with 1000 because figures are in thousand. वरना फिर कंफ्यूज हो जाओगे बिकॉज सारा बैलेंस शीट का फिगर्स थाउजेंड में है. अब कुछ फिगर्स के लिए बार बार आप उस तरफ नहीं जा सकते. Then they have given inventory 22,000 and 16,000. Trade receivables 35,300 and 9,000. Bank 2,800 and 1,500. So total is given. In the equity and liabilities side, they have given equity shares of one each. For runner, 200 and 2,500. This is important. For runner, this is the equity. And for jogger, that is the subsidiary, 25,000. Out of this, only 80% has been purchased. Retained earnings, 286,600. This is parents' retained earnings will entirely go to group retained earnings in working note 5. And this is 28,600. Retained earnings of subsidiary as on reporting date. Current liability is given trade payables 81,800 and 17,600. Runner company's policy. Now let's read the additional information that is provided because more or less question यहीं पर होगा. Runner company's policy is to value the non-controlling interest at fair value on the date of the acquisition. There are two methods, right, to value non-controlling interest. Runner company says we use fair value, not proportionate of net value method. Fair value of the non-controlling interest in Jogger on 1st April 2004 was estimated at $13 million. That is 13,000. मल्टीप्लाई करते जाओ 1000 से ताकि बैलेंस शीट फिगर के साथ टैली में रहो. This is the first part. That fair value of NCI will come through proportionate method, not through will come through fair value method, not through proportionate method. The fair value of jogger company's other assets, liabilities, and contingent liability at 1st April 2004 were equal to their carrying amount. So they are telling the fair value of jogger company's other assets, liabilities, and whatever was contingent liability were equal to their carrying amount only. Whatever was here was equal to it carrying amount only, with the exception of a specialized piece of plant. So one specialized piece of plant is not included here. For that, fair value and carrying value are different. Remember in the last concept class, I told you fair value adjustment has to be done in working note 2, which had a fair value of 10 million, 10,000 in excess of its carrying value. Now, this is a depreciable item plant. So, of course, some depreciation must be there. So, 10 million in excess of its carrying amount. Plant had a 10-year remaining useful life. So, every year, this 10,000 will be depreciated by 1,000. But this will go on reporting date only, not on acquisition date. That is what I taught you, right? That fair value adjustment only on acquisition date. Post acquisition depreciation on reporting date. Okay, these two, both the notes are interesting because detail में दिया हुआ है. Third, in December 2004, after acquisition, Jogger company sold goods to runner company for 6.4 million. Okay, subsidiary has sold to parent for 6.4 million, that is 6,400. Earning a gross margin of 15% on sale. Profit margin is 15% on sale. Runner company still held for 4.8 million, that is 4,800 of these goods in its inventory at 31st March 2005. So there is unrealized profit also. This is subsidiary. So journal entry will be subsidiary retained earnings debit, inventory credit. You have to bring down the inventory to its cost. अगर पेरेंट ने बेचा होता तब ग्रुप रिटेन्ड अर्निंग्स डेबिट करते. Last working note, Jogger company still had the full invoice value of 6.4 million in its trade receivable. See, they are telling now in working note 3 that Jogger had sold to Runner for 6.4 million. Here they are telling Jogger still has the full invoice available of 6.4 million. Runner company's payable only showed 3.4 million. There is a difference. Why? Cash in transit, as it made a payment of 3 million on 31st March, which was not recorded. Cash in transit. Remember cash in transit. अच्छा क्वेश्चन है. सारा एंट्री एक साथ ही दे दिया है. So cash in transit, what was the thing? For the receiving company, assume as if the cash is already received. मान लो कैश मिल गया है एंड वंस इट reconciles, cancel the mutual debtor and creditor. So see, so many things, so many adjustments are here. Fair value ठीक है, that is not adjustment. You have fair value adjustment which we discussed. We have unrealized profit on sale of inventory adjustment. We have mutual debtor and creditor, and we also have cash in transit. So it is good question actually. Okay, so let's start solving. As I had discussed with you in the first class only, basics of consolidation that keep the format ready. So establish the group structure. Parent companies, runner. जब भी इस तरीके के क्वेश्चंस बना रहे हो ना एंड यू आर वाचिंग अ वीडियो इन यूट्यूब, किसी का भी देख रहे हो, ऑलवेज टेक स्क्रीनशॉट ऑफ क्वेश्चन एंड साइमल्टेनियसली ट्राई टू सॉल्व इट. इसको मूवी की तरह मत देखो दैट यू विल सी एंड यू विल अंडरस्टैंड. नो, यू नीड टू सॉल्व इट टू अंडरस्टैंड. Or take a screenshot, watch it simultaneously, but keep on noting it down in your copy so that you understand. Pause the video multiple times. Date of acquisition 1st of April 2004. And percentage of ownership 80%. What is the name of subsidiary? Jogger Company. Working note 2 talks about net assets of subsidiary and all, but there are some further adjustments here. So first, let us go to working note. After working note 5, let's create this further adjustments. Okay. First, remember I need to calculate the cost of investment because I had forgotten deferred consideration is also here, right? So let's calculate the cost of investment. Now, if you look at cost of investment, what do we have? See, consideration consisted of cash of 42,500 and further 21 million that is deferred only for 1 year. So no accounting entry is made for deferred cash consideration. ठीक है. Appropriate discount rate 0.926. Okay. So cash consideration. And there is some deferred cash consideration. I had told you that this should be recorded at present value. So 21,000 multiplied with 0.926, the factor they have already given. एक्सेल तो कैलकुलेटर नहीं लाया हूँ आज मैं. 19,446. तो total cost will be 42,500 plus 19,446. 61,946. Now remember, in the consolidated balance sheet also, just remember this very carefully. This deferred consideration will be shown as a liability because पैसे तो देने होंगे ना. Now this is only 1 year. So what will it show? 19,446, fine. But after, oh, it's only 1 year, right? So ultimately it's 8%. So you will have to increase it by 8%. So unwinding of discount, as we say. So what will be the deferred consideration that will be reported in the balance sheet? So deferred consideration 19,446 and unwinding of discount as we call it generally. Bonds, leases, same concept. 19,446 into 8% last carrying value. So 19, 8%. 1,555. I can call it 1,554 maybe because totally to 21,000 ही करना है ना. So let's have 1,554. And ultimately because it's 1 year only, at the end बैलेंस शीट में पूरा ही 21,000 आ जाएगा बिकॉज इट्स 1 year. दैट इज वाई फुल डिस्काउंट वाइंड अप हो गया. अगर 2-3 साल होता तो कुछ एक पोर्शन ही होता. बट याद रखना दिस विल गो एन लाइबिलिटी इन द कंसोलिडेटेड बैलेंस शीट. नाउ आगे बढ़ते हैं. वर्किंग नोट 6 इज ऑल्सो डन. First, I did working note 6 only where I calculated cost of investment. Now, what else is there? Non-controlling interest, fine. That way I will go to working note 2. Fair value. This is part of working note 2. Unrealized profits. In December 2004, Jogger company sold goods to runner company. Subsidiary sold to parent for 6.4 million, 6,400. Earning a gross margin of 15% on the sale. So gross margin profit is 15% on sale itself. And runner company still held 4.8 million, 4,800 of these goods in its inventory. Okay. Working note 7. See, till 5 generally there is a standard format. After that अपने हिसाब से कर लो. Calculation of unrealized profit in inventory. So value of inventory on account of intercompany sale. You have to write it down, no? Because total inventory might be different. So value of inventory on account of intercompany sale is 4,800. They are telling gross margin. That is the unrealized profit. Gross margin, or this is the profit that is not realized. It's 15% of this. So it is 4,800 into 15%, 720. This is the correct inventory. So what should I do? Remember, subsidiary has sold to parents. If parent would have sold to subsidiary, I would have done group retained earnings debit, inventory credit. Here I will do subsidiary retained earnings debit 720. And remember, this will be reported in working note 2. Inventory credit 720. So remember, I have to adjust this. remember इसलिए बोल रहा हूँ बिकॉज आप लोग भी खुद से ही सवाल बनाओगे घर पे, तो याद रहना चाहिए. Anything else? Yes, debtor and creditor. Jogger company still had the full invoice value of 6.4 million in its trade receivables. Okay. Mutual debt. Working note 8. So, what are they telling here? Jogger company still had the full invoice value of 6.4 million in its trade receivables. So for Jogger, which had sold the goods and they had receivables full 6.4 million, that is 6,400. But they are telling runners payables only showed 3.4 million. So runners was only showing a payable of 3.4 million. What was difference? Cash in transit. Now, what was the rule that I taught you? I taught you rule number 1, assume the cash is received. Assume the cash is received. So in this case, who has to receive the cash? Jogger. So cash debit 3,000, receivables credit 3,000. Now what will happen? With this entry, 3,400 and 3,400, that will become the status of mutual debt. So eliminate them. Creditor debit, eliminate it. Debtor credit, eliminate it. Now more or less I have the entire workings done, apart from basics of course, which has to be done. What do I see? In cost of investment, I have to remember some current liability. This will be reported in the balance sheet. Balance to cost of investment will go in the, this to will be reported in working note 2. URP, this will be reported in working note 2 and this will go in the consolidated balance sheet. Mutual debt, again, all consolidated balance sheet. Okay, so let's start working note 2. पहले यहीं से start करते हैं. Share capital. I had also told you that generally they don't tell you any information about share issues. So if they are telling you that no shares were issued after acquisition, assume you don't assume so. सो इन केस हियर पे रिपोर्टिंग डेट में बोल रहा है 25,000, अज्यूम ऑन द डेट ऑफ एक्विजिशन ऑल्सो 25,000 ही था। जब तक नहीं बोले कि एक्स्ट्रा शेयर इशू हुआ है, प्लीज कुछ भी उल्टा पुल्टा अज्यूम मत करना। 25, 25। Reserves, share premium not in the question. Retained earnings is there. See, on 1st of April 2004, Runner Company acquired 80% of Jogger when the retained earnings were 19.5 million. And what is the retained earnings on reporting date? 28,600. Difference is post acquisition reserve 28,600 minus 19,500. 9,100. Revaluation surplus not there. But this is not the end of the question. Something else is there here. क्या है वो? See, fair value adjustment. In working note 2, they are telling the fair value of Jogger company's other assets, liabilities, and contingent liability as on 1st of April 2004, that is the date of acquisition, were equal to their carrying amount with the exception of a specialized piece of plant whose fair value was 10,000. 10 million means 10,000 in excess of its carrying amount. This is what I discussed in the previous session in concept fair value adjustment 10,000. And I told you this adjustment is only done on the acquisition date. But the plant has remaining life of 10 years. The acquisition date, yes, but you will also note it down on the reporting date. ऐसा नहीं है कि दोनों गायब हो जाएगा. Post acquisition depreciation adjustment. This is because of fair value only. This has a remaining life of 10 years. Straight value 1000. Nothing else is there now. Oh, I forgot 920 else is there, right? 720 or 920 क्या है यहाँ पे? Subsidiary retained earnings. In working note 7 or 8 I was computing na. See, unrealized profit in inventory. Provision for unrealized profit in inventory 720. That will also be adjusted in working note 2 only. Again, nothing on the acquisition date. Entire thing is on the post acquisition date. So this is to done. Let's total it 25,000, 19,500. थोड़ा बहुत वर्बल कैलकुलेशन ठीक है मेरा. So 25,000 plus 19,500. That's 44,500 plus 10. 54,500. ये वाला बहुत ज्यादा हो जाएगा. कैलकुलेटर लेना पड़ेगा. 25,000 plus 28,600 plus 10,000 minus 1,000 minus 720. So it's 25,000 plus 28,600. 25,000 plus 28,600 plus fair value adjustment of 10,000. Yes, I have already recorded it. 10,000 depreciation of 1,000 that will be subtracted. Oh, unrealized profit. So what is here? In inventory 4,800 into 15%. क्या है ना, इतना सारा वर्किंग्स हो जाता है ना, मैं खुद ही कंफ्यूज हो जाता हूँ कभी कभी. हाँ, 4.8 million, so 4,800, 720, correct. So here what do I have? 61,880. And final column, what do I have? 9,100 minus 1,000 minus 727380. From this, certain thing will go to the subsidiary, certain amount will go to the NCI. I'm just checking, have I missed any adjustment? Hmm, no, everything is recorded. Chalo, let's then calculate goodwill. Investment made by parent at fair value. What is the fair value? Working note 3. Sorry, working note 6. 61,946. NCI at acquisition date. It's directly given, right? In working note 1 only. It's 13 million. That's 13,000. So this will become 74,946. Fair value of net acquisition. Again, directly given. 54,500. So goodwill will come as difference 74,946 minus 54,500. That is 24,446. This is your goodwill on acquisition. And there is no impairment. So this is also your goodwill on balance sheet. NCI. So 13,000 is already there. Post acquisition reserve. What is post acquisition change? 7380 into 20%. 1476. Anything else? No, there is no impairment loss. Nothing that will go here. So this is the total 14,476. And this will go to your balance sheet. Group retained earnings, parent retained earnings, 100% will be reported here only. Parent retained earnings क्या है? 286,600. Goodwill, again, 80% na? What is the post acquisition? 7380 into 80%. 5904. Anything else? No, there is no impairment. There is no bargain purchase. So this is the final figure that will be reported. Equals to 286,600 plus 5904. 292,504. With this, the workings are over. Now we can just go ahead and fill up the balance sheet. So I hope workings are clear to all of you, right? Okay. So let me just once check all the workings that I have done. So working note 1, group structure done, net assets of subsidiary done, computation of goodwill done, computation of NCI done, retained earnings done. Cost of investment may we have cash consideration and this deferred cash consideration that will okay unwinding of discount. In this year, so I have to record this as an expense in the P&L. So this will reduce my group retained earnings. In unwinding of discount, as I must have discussed also, this will reduce my group retained earnings because it will hit my P&L only. So 1554, इसीलिए ना क्रॉस चेक कर लेना चाहिए. 1554. So where was this 292? Minus 1554. That is 290950. So now I have group retained earnings fully done. Cost of investment is done. Working note 6 taken care of. What about working note 7? Unrealized profit in inventory. So one part is already taken care of. Valuation of inventory. Subsidiary retained earnings done. This I have to remember to subtract in the balance sheet. Mutual debt. I have to remember that from trade receivables, I have to subtract 6,400. That is what I have to subtract from trade receivables, 6,400. 3,000 for the name of cash and remaining 3,000 for cash and 3,400 for mutual indebtedness. ठीक है. And for payables, I will reduce 3,000. And for cash, I will increase 3,000. Anything else that I am missing? No. So let me start solving then. Or putting in the figures, as I must say. Runner acquired jogger. Okay, first I have goodwill. Working note 2. वर्ड में करने का ना, खासकर जब स्टूडेंट्स नहीं होते लाइव क्लास में, ये एक नुकसान है. स्टूडेंट्स होते हैं तो बड़ा आसानी से उनको बोल दो, वो ट्रैक कर लेते हैं. मेरी जिंदगी आसान रहती है. 2446. 2446. PP&E in the balance sheet there is given 455,800. 44,700. Now remember, in this data I have to add 10,000 and I have to subtract 1,000, because 10,000 for fair value adjustment and 1,000 for excess depreciation, Excel, equals to 455,800 plus 44,700 plus 10,000 for fair value adjustment minus 1,000. 509,500. These two columns are not necessary. I told also I could have deleted it. मैं अपना काम आसान करने के लिए कर रहा हूं, वरना कितना बड़ा डॉक्यूमेंट जा जाके देखो, कॉपी तो है नहीं. Investment. Now out of total investment of 55, 42,500 is to in subsidiary. So balance is outside. It should be there. Current assets. I think in all of them they have adjustment. What is there in current assets? Inventory. So here they have 22. Here they have 16. And remember to subtract 720. That is the unrealized profit, right? So Excel equals to 22,000 plus 16,000 minus 720, 37,280. In debtors, I said that for debtors, we have to be careful. We have to subtract 6,400 because something was subtracted while passing the entry for crash also. So receivables. What is the value of receivables? 35,300, 9,000. We have to subtract a total of 6,400 here because 3,000 went away because of cash and 3,400 eliminated. So 35,300 plus 9,000 minus 6,400, 37,900. And last is what? Bank. Add 3,000 here. So bank 2,800 and 1,500. आई होप आप लोग भी मेरे साथ बना रहे हैं ये क्वेश्चन. ऐसा नहीं है कि बस देख रहे हैं. एंड ऐड 3,000. दिस विल बी 7,300. ये तो मैं ही श्योर हूँ. बेसिक कैलकुलेशन मेरा अच्छा है मैथ्स का. खुद की थोड़ी तारीफ कर लो. सो 2446. ओके. लेट्स टैली दी एसेट साइड. 2446. 509,500. 12,500. 37,280. 37,900. And 7,300. This is it. So let's just sum equals to sum 624,926. Okay, let's go to equity. We only keep parent share here. How many shares parent have? 202,500. Retained earnings. We'll go to group retained earnings figure. 290,950. NCI working note 4. I'm just copy pasting now. 14,476. 14,476. Total I'll omitting for the moment. Current liabilities I'll have two. One I will have trade payables in the balance sheet. 81,800, 17,600. I think mutual creditor was 3,400, right? Huh. 96,000. And last deferred consideration. I had told you it has to be recorded in liability. Why current? Because it will be paid within 1 year only from balance sheet date. Actually, next day only. So if you look at this, I'm breaking it down. What was that figure? Let's go to here, working note 6. 80, 19,446 plus 1554. 21,000. Let me note all these figures also somewhere. So what do I have? 202,500. 290,950. 14,476. 96,000 and 21,000. Sum. I hope it tallies. I don't want to go through the entire mess of finding where I went wrong. 624,926. Perfect. Tallies. Most likely I'm correct only. I think lot of time has passed in solving this one question only, right? I think I'll try to solve one more in another session, but this is how you solve consolidated balance sheet questions. I also plan to upload lectures on P&L, consolidated, associate and all. So this is where all the adjustments come into the picture. प्रॉपरली करो और वीडियो को देखो तो क्वेश्चन नोट डाउन करो वर्किंग्स के साथ करो चलो हैव अ गुड डे थैंक यू एंड इन केस ऑफ एनी डाउट यू गाइस कैन ऑलवेज रीच मी आउट